Hello and welcome for the session on the Vivad se Vishwas scheme. That's a new scheme which has been formulated by the Ministry of Finance in respect of resolution of income tax disputes. Last year, we had a similar scheme which was geared towards indirect tax issues, where the government had significant success in resolution of a number of disputes. And this year, they have tried to extend it or tried to introduce a scheme to resolve disputes or to settle disputes relating to or pertaining to the Income Tax Act. For everyone who's interacted or who's done business in India, I think one of the challenges or the inherent challenge of the Indian market is the sheer volume of tax litigation and tax issues which tend to arise. At last count, just before the tribunals in the country, there were around 88,000 disputes which were pending before the income tax appellate tribunal. Traditionally, the Indian income tax authorities have generally been perceived to be high-handed or to be revenue-minded when it comes to income tax matters. Before we get into the settlement scheme, what we need to keep in mind is that this is, at this point in time, the backdrop of the scheme is that we've witnessed a fall in tax collections for this financial year, and that is one of the reasons why, as a manner or method of augmenting revenue, that this scheme has also been set forth, just so that the pending disputes can be resolved, and hopefully if taxes have to be paid on that gets recovered. At the same time, over the course of the last 2 years, the government has been proactively looking at means of reducing tax litigation. The income tax authorities had issued various circulars relating to filing of appeals before the tribunals and High Court to ensure that no appeals were filed in respect of low tax matters. Because what tends to happen in India, as a matter of fact, is that the revenue authorities want to appeal everything till there is a final resolution. But the income tax authorities or the revenue came back with a circular to avoid disputes relating to low tax matters. That resulted in clearance of a substantial backlog of matters. And that has now been followed by this income tax settlement scheme, which provides an additional avenue to resolve further disputes, which are currently pending before various authorities, whether it is at the lower level or before even the High Court or Supreme. So with this backdrop, I think let me get in Ashish. And Ashish, why don't you give us a flavor in terms of, when in India, when we are looking at tax litigation, how does a tax litigation actually move through the chain? And I think it is slightly unique the way the Indian tax system works as compared to many other systems with the layers of appeal and the multiple different prongs. So it'll be useful to give a flavor around that to the audience.
Sure. Thanks, Rajesh. So I think Rajesh set the context in place that litigation in India can be a long and tedious process, and where the revenue department can be quite, and they want to litigate every final outcome is. In India, we need to at least go through 4 appellate stages before you may find a final answer. Hopefully, you can get this process done quickly. But in our experience, we estimate this time to be close to about 7 years. It could be longer as well, but we hope you can get it done in 7 years. So, starting with the most bottom of the chain, there is the assessing officer. This is the place where your returns are scrutinized, where you are asked to provide all facts. There are a number of questionnaires that the officer asks you. This is the bottom chain where this is the first round of questioning your return will take place, where all sorts of questions with respect to whatever you have disclosed in your return of income will be put forward to you, and you will need to answer them. The assessing officers today have gone beyond just the return, and they even try to look out for any kind of information available about the taxpayer to find out if there is any sort of undisclosed income as well, which they would like to bring about and ask you, and then maybe even add that to your total income and therefore increase the tax payable by you. Uh, at this stage, the assessing officer passes what we call as an assessment order. From the assessment order, we can make an appeal to the Commissioner of Income Tax, where he is known as the Commissioner of Income Tax Appeals, uh, where the order of the AO is again discussed and the CIT asks further questions. We noted that the assessing officer will take down all the facts, and at the commissioner's level, you will be allowed to only bring in fresh facts only in exceptional circumstances by making a specific request under specific rules under the income tax rules, pursuant to which you will be able to bring in more additional facts, and then the CIT will pass his order. The order can then be challenged before the tribunal. In our experience, the income tax appellate tribunal is the place where you would be able to get relief, generally in most cases. Till the Commissioner of Income Tax Appeals, you would always find that the CIT or the Commissioner of Income Tax Appeals is almost passing the same order that the assessing officer does. Post which we go to the Income Tax Appellate Tribunal, where the matter is heard again. Uh, this is the body that is the last fact-finding body where your matter is heard on merits. If the order is in favor of for the taxpayer, then the matter ends there. Otherwise, of course, that the department can file an appeal before the High Court, or if the matter is against the taxpayer, then he also has the right to go and file an appeal before the High Court, which is again on the question of law, where the High Court would hear the appeal, post which, if any further appeal is required, then we can go finally to the Supreme Court. At all stages, the department has the right to file an appeal, and therefore they even can go to the Supreme Court in case of a negative ruling against them. Well, couple of additions that have been made over the years to perhaps make this process slightly better. One of which is the dispute resolution panel. For non-residents, this is a specific channel available where after the assessing officer, you could go and choose to go under the dispute resolution panel, where the assessing officer first passes a draft order, and then you have to present your case before the dispute resolution panel. There is a time-bound time limit given to the dispute resolution panel, where they need to give their findings to the assessing officer. The assessing officer then passes the final order. Once the final order is passed by the assessing officer, the benefit of going under the dispute resolution panel is that you can straight go to the Income Tax Appellate Tribunal and do not have to go to the Commissioner of Income Tax. It's a bypass that is available in a time-bound manner, which is why it is popularly used. And then the same process follows. Another very popular regime, a very popular forum that is used by taxpayers is the Authority for Advance Rulings. Here you can present a case before the advance ruling in situations where a transaction that has already happened or a transaction is going to happen, and the Authority for Advance Ruling will provide their response to whether tax is payable in India or not. And once the Authority for Advance Ruling has pronounced their order, it could be appealed at the High Court through a writ, or an post which it could go again to the Supreme Court. Similarly, in case for the department, even in case of a negative order, negative order for the advance ruling, they could go to the High Court and then to the Supreme Court. Various rules are in place as to what matters can be heard by the advance ruling, and that needs to be kept in mind before we approach the advanced ruling for any matters. This is broadly the process and broadly the litigation process that we see in India. And since there are so many levels, so many appeals that are allowed, this could be a time-consuming process, and hence we estimate, litigations to be taking about close to 7 years in India. Uh, so I think while I've set the context for litigation in India and the number of appeals, etc., that have to be filed and the time-consuming process. Since we have Meyyappan here with us today, I think it would be nice to hear him, considering he's been on the other side with the Solicitor General and argued matters on behalf of the revenue. So, what's his experience like? What does he feel? How things are going? What can change? Meyyappan, your thoughts.
Thanks, Ashish. So, I will just be adding some points to what Ashish and Rajesh have set out. Also, to understand better from the revenues perspective, what sometimes drives their decisions when it comes to appealing cases, or we understand the motivations of how they respond to disputes. Now, as Ashish had set out, I mean, the initial assessment happens, and the question of appealing at each stage, there is a onus on the revenue department to collect a certain target during the year. So to hit those targets, they usually try and look at some gray areas, and typically sometimes it ends up that these sort of issues are raised in an order. And what ends up also happening is that when it goes up in subsequent stages of appeal, is that and this is supported by statistics, by national litigation statistics in the tax sphere, especially, where considering the first two stages are before the tax authorities themselves, in the assessment officer stage and in the Commissioner of Income Tax appeal stage, 80% of the cases are decided in favor of the tax department. Now, once it goes in appeal to the tribunal or the High Court or Supreme Court, then it's actually the other way around, where 80% of the appeals are decided in favor of the litigants. Now, this shows a kind of a clear bias that the tax department, of course, is very aggressive when it comes to pursuing tax cases. The other angle to this is also that when the officer passes an order in terms of accountability, officers typically get transferred from their postings once in 3 years, 4 years. So, and as Ashish had set out, the appeals process takes about a couple of years in each stage of appeal. So what ends up happening is, by the time the matter is before the High Court or the Supreme Court, it's very unusual for an officer to be pulled up for this kind of initiating such cases, and that kind of complicates the problem. In fact, some years back, I think the officers were promoted on the basis of the amount of taxes that they brought within the tax net, and which set a perverse incentive for issuing orders to clients in such cases. So, and this is also legitimately, to some extent, the timelines that we are talking about from the resolution side is complicated to some extent, because technically each stage of appeal is at least up to the High Court level, from assessing officer to CITA to ITAT to High Court. There are limitation periods within which you have to file an appeal, but it's become standard practice for in many cases where the department is unable to meet the limitation period and make the appeal before 90 days ends. So they file usually a condonation of delay application, which is more usual than not admitted by the High Court or the Supreme Court in many cases. And sometimes cases, I mean, it could be 300 days of delay, it could be 1500 days of delay. It's case specific, but yes, there is no hard and fast rule. So this makes it difficult from the client's perspective also to predict as to, okay, I've gotten a favorable order from a tribunal. Is that the end of it, or is there going to be an appeal, or that's also a doubtful thing in every client's mind. But from the revenue side, this process of filing an appeal and it being taken up is more or less mechanical. In fact, Rajesh had mentioned certain notifications that had come through by the CBDT, where they limited the appeals by saying that if it is low tax effect, or if it has low values involved, then they shouldn't file an appeal, and that limit has been going up every couple of years. But nevertheless, there are times when there are low tax cases in terms of impact, which are still admitted because of the substantial question of law, or which may become an issue in a subsequent appeal or in a different matter. So there are always exceptions to the rule, in the sense even the AIR was meant to be a final forum, and within 6 months it was meant to give resolution to foreign investors. But again, now the Supreme Court has the right to admit the appeal, and many times the courts do exercise that discretion, which still results in pendency. Now, coming to the number of litigations that were involved on the tax side, again, as a result of this, what ended up happening as a matter of practical experience was that there were at least 20 to 30 cases for admission every Monday and Friday at the Supreme Court level, which is the final level of appeal after having sifted through all these cases. And you had several workload on the Supreme Court because of that. Some of the bigger cases that we're involved in were like the Vodafone case, Sanofi case, a lot of the big international tax cases. All of them were cases that I had dealt with in the past. But what this makes it is it complicates it even for the revenue side at some level, because as far as the officer is concerned, so long as the order is issued and the matter is in appeal or pendency, the amount of revenue is supposed to be in the revenues kitty. But like I said, 20% of the cases is ultimately what they succeed even at the Supreme Court level. So what ends up happening is that a lot of this money has to be refunded, sometimes many times with interest as well. So it's not necessarily in the interest of the revenue to pursue these kind of appeals for prolonged periods. But at the same time, so there's technically an incentive for them to cut back on this. But I think that's where the scheme has probably come in. Now, I want to ask Rajesh, since he regularly appears in courts, what's his impression of the litigation process from the client's perspective, and whether there is a way to make it simpler for all parties involved?
Yeah. So I'll tell you, one of the biggest differences between what we see in the Indian system of managing or resolving tax matters versus what you find across the world is that in most other countries you have some system or scheme where, at least at the initial level, matters can be settled, or there is a non-adversarial manner in which parties sit across the table. Sometimes we've seen situations in some countries like Mexico where they even have arbitration as a method or mediation in order to resolve disputes. Unfortunately, in India, really, you don't have the ability to actually try to find a middle ground with the tax authorities. It is an adversarial system. So it's literally a case of either it is the taxpayer's position which succeeds or the tax authority's position which succeeds. So inherently, as a starting point, you end up in a situation where, as Meya pointed out, the tax authorities are under pressure to actually collect taxes or to increase to meet targets, as compared to a situation where you're trying to actually reward the tax authorities for ensuring that they come to the right decision. And from a taxpayer's perspective, the challenge is the fact that you cannot actually, it is an absolute adversarial process right from the beginning. While the dispute resolution panel was introduced to sort of make it akin to arbitration, it has not really succeeded till date. The benefit of dispute resolution panel really is the fact that you don't have to pay any tax amount while the matter is before the dispute resolution panel, and you have the ability to go to the tribunal in a much quicker time frame as compared to this the appellate going before the CIT appeals. But so that's the first set of challenge, which is that unlike in other jurisdiction where you can sit across and try to resolve a dispute with the tax officer, here you don't have the ability. The second challenge which comes in is the fact that inevitably or invariably, because of the time that it takes for resolution of disputes, you end up in a situation where you will end up with multi-year disputes. What happens is that, let's say there is a transfer pricing adjustment which happens in 1 year, which changes the profit margin from 15% to 20%. That matter then goes up on appeal, first before the Commissioner of Income Tax, then it goes before the tribunal, then possibly the High Court. And what ends up happening is that the tax officer will keep passing the same order in the subsequent years. While obviously for tax matters, you don't have the concept of res judicata and you treat each year separately, the tax authorities still end up following the previous year's guidance, absent any material change in facts. So this ends up in a situation where inevitably for any MNC, you end up with a multi-year dispute, or for any corporate for that matter. So it is hard to find corporates today who don't have disputes which stretch across at least 7-8 years. And they all start getting clubbed together and try to resolve it at one shot, but it takes time. The third biggest issue from a taxpayer standpoint is the fact that when you're going on appeal, if you're going down the process path where you're going to the CIT appeals in the first place, there is a circular in place which says that you have to pay at least 20% of the demand. And in some cases, it can be higher. So which means that there is a cash flow mismatch also which happens. Even though the taxpayer took a certain position, the tax authorities took a contrary view, passed an order, and you've decided to go on appeal, but you still have to end up paying at least 20% of the taxes. In fact, in this year's budget, the finance minister has introduced a new provision to say that even if you're going from the CIT appeal to the tribunal, even at that time there is a deposit or a 20% deposit of tax that needs to be done, and tribunal will not grant the absolute stay. Otherwise, the discretion was always with the tribunal to determine in terms of whether to even grant complete stay. This becomes a bigger challenge, especially in case where there's a high-pitched demands and again, there are enough precedents of high-pitched demands coming through in the past. So all of this takes you to a situation where, at least from a taxpayer perspective, you, instead of having the ability to focus on business, they need to have a large team in place just to sort of manage their disputes with the tax authorities. A couple of other points I will also make, especially when it comes to cash flow situation, is that even in a situation where you're getting refunds, for example, where you've succeeded before the tribunal, the tax authorities will take a stance that, well, we have filed an appeal before the High Court, therefore we will still follow our previous orders. And on top of that, even if they want to give any refund, they try to adjust it against other demands. So it's always a bit of a tussle between the taxpayer and the tax authority, just in terms of managing collection of taxes. And this becomes, at least from a taxpayer standpoint, a large devotion of resources, much more than what you would generally find. And unfortunately, again, while I was on the mediation or arbitration as methods to resolve tax disputes, the only sort of settlement mechanism that we've had till date is that we do have a concept of settlement commission, where certain kinds of disputes, you can go to the settlement commission, but you have to end up paying pretty much all the taxes, interest, penalties and all. It is to avoid other kinds of penalties or prosecution which is there. And that has not really worked as a concept, because as Meyyappan was saying, statistically, the taxpayer inevitably wins in 80% of the cases once it goes to the tribunal. So which leaves taxpayers really with the choice saying that, you know, it's better to litigate rather than to go in and go in under any other mechanism, because they don't really have a choice. I think this is sort of, and this is a tussle which has been recognized between the perspective of the tax authority and the perspective of the taxpayer. and which is where I think in this that the scheme has been introduced by the finance minister, which actually, having looked at past disclosure schemes, voluntary disclosure of income in the past, we've had those schemes. This is probably one of the better schemes which has been actually constructed. And Ashish, I think this is a good point for me to bring you in to sort of lay down the overview in terms of what the scheme is, how it works, and what options do taxpayer have.
Sure. I think this is the Direct Tax Vivad se Vishwas Act 2020 that we are talking about. For all our non-resident listeners, Vivad se Vishwas would mean from dispute to trust. That's where the tax department is aiming all the taxpayers to get at. Essentially, the bill covers any cases which are pending as of 31st March 2020, which are before the Supreme Court, the High Court, the Income Tax Appellate Tribunal, or the Commissioner of Income Tax Appeals. So any of these, any matters pending before these forums before on 31st March 2020 are eligible to take benefit of the scheme. Apart from that, any writ petitions before the High Court or Supreme Court for tax matters, any special leave petitions before the Supreme Court, cases where the time limit for filing an appeal against an order has not expired as on 31st Jan 2020 are also covered. In situations where the DRP has given the directions to the assessing officer, but the assessing officer has not passed a final order, even in that case, this scheme can be utilized. Search and seizure cases where there is a search and seizure taking place at the taxpayer's premises, house, etc., but the disputed tax is less than INR 5 crores. In such situations, the scheme can be made use of. Disputes relating to tax deducting at source, withholding tax also come within the scheme. Now, the very interesting part about this scheme, and which is what makes this so popular, is that if you have a disputed tax amount because of any of these matters which are pending before any of the forums, then the scheme allows you to pay only 30% of the income and be done without payment of any interest or penalty. Now, interest and penalties can be a very huge number, because interest is charged at almost 1% per month from the day the assessment order is passed, and penalties can go between 100 and 300%. So therefore, from that perspective, if you want to get rid of your interest and penalties, this scheme definitely works out for paying only the 30% tax. Now, this scheme was announced, of course, in the budget of 2020, that was on 1st February. However, and the scheme was made available till 31st March 2020 for all those who were willing to pay only the 30%, and for those who would take some time in understanding whether they want to go under the scheme. There was a specific provision which provided that apart from the 30%, an additional 10% would be paid, and you would be given time till 30th June 2020. But amid the COVID scare, these dates have been changed, and currently, if you want to pay only the income tax amount, that is the 30% amount, then you can avail the scheme up to 30th June. The later dates have not yet been provided for. A number of FAQs with respect to who can avail of the scheme and in what situations can the scheme be availed were also brought about by the income tax department, and depending upon the facts and circumstances of each case, they can be looked upon and decided whether an appeal can be made against that. Also to add here that in situations where in different types of situations, the tax amount may be slightly higher because of the peculiarity of the situation. Specifically, certain situations where you have, suppose, a search and seizure and the amount is more than 5 crores, then you are not allowed to take benefit of the scheme. In case you have foreign assets which have not been disclosed, you are not allowed to make use of this scheme. Similarly, certain other provisions, such as when there is when you have been when you are under the smuggling or smuggling, and you are under the Tax Act, you are not allowed to make use of the scheme. So all in all, the scheme does provide for benefits that the tax make use of during this time. And considering that the timeline has been pushed to 30th June, there is about 3 more months from today where the taxpayer can think about whether they'd like to avail the scheme and pay the taxes and be done with. I think the perspective that this needs to be looked at is that by availing of this scheme, you are getting rid of all your litigations that are pending in Indian courts and Indian appellate forums without payment of interest and penalty. While Rajesh said that 80% of times we have seen that the taxpayer is the one who comes out as the winner, but it's also important to understand that this could take many years, and therefore time and cost benefit analysis needs to be done to understand whether we need to really avail of this scheme or not. Sometimes 7 to 10 years could be a very long period of time, and you may just want to end up paying tax under this scheme. Therefore, the scheme provides for something that something good to offer for the taxpayer to think about and make use of it. I think that's basically the overview of the scheme. Meyyappan, what do you think about the scheme? Do you think this will result in positive results, or will it give us negative results?
Thanks, Ashish. So I think taking a lead from what Rajesh had earlier said about the indirect tax amnesty scheme that was introduced last year, it was quite a success in some ways, but I think the lessons to be learned are in where it didn't succeed. So some interesting statistics there are that 90% of the taxpayers who were eligible for that scheme actually opted for the scheme. So in that sense, it was a resounding success. But I think from the perspective from which, if you're looking at it, is that the government wanted to collect more revenues. In that case, it was a bit of a miss because the indirect tax scheme, the 10 to 12% of the taxpayers who didn't pay, their disputes accounted for about 80% of the disputed tax money. So keeping that in mind and to compare the schemes, because that's the closest sort of analogy that we have today, the taxes payable were about 50% to 70% of the demand amount. So keeping that in mind, and it was the bigger businesses that didn't opt for the indirect tax scheme, which, like as Rajesh was saying earlier, if you have a good case in the appellate stage, and if it takes just a couple of years, and if you're as a big business, you have the ability to withstand it in a better way, you might as well litigate it, maybe the attitude. So coming back to this scheme, maybe it will see a bit more success in terms of actually garnering more revenue compared to the indirect tax scheme. But of course, there is a lot more that could have been improved upon it to make it a bigger success. Sorry, and so in light of this, I'd like to ask Rajesh that since there has been so much debate and many recommendations have been made between the bill and the final passing of the Vivad se Vishwas Act, and clarifications came through by the CBDT as well. So could you please throw some light on that?
I think so. While, as he was rightly pointing out, that last year when they introduced the scheme, insofar as indirect taxes are concerned, majority of the disputes which were settled were actually the low tax disputes, whereas the bigger disputes were actually not resolved. I think that's a similar sort of approach which may end up happening even in respect of the income tax scheme, for the simple reason that whenever it comes to high tax disputes, even though there is an option which is provided to the taxpayer to only pay the taxes, and in the situation where it's the department which has gone on appeal, it is actually a reduced amount even compared to the taxes. Used in considering that the taxpayer has generally been successful before the tribunal, the High Court and the Supreme Court, you would find that a lot of the taxpayers would actually, when it comes to high pitched demands, would not opt for the scheme, especially considering situations where there has been what I would call egregious cases which are there. But what you are also going to have is that for a lot of the routine matters where the quantum of taxes are not high, but there is just the pain of litigation for being stretched over a period of time, where it actually makes a lot of sense for people to go ahead and have those disputes resolved. We've seen cases which have stretched on for 10, 12 years in the past, where people are considering saying that let's just go in under that, pay taxes one time and be done with it, especially considering that when it comes to foreign clients, you've had a situation that there's been a dollar depreciation or rupee depreciation which has happened over the 10-year period, which has effectively resulted in the quantum of taxes payable being half of in dollar terms to what it was 10, 12 years back. So there are situations and opportunities which are available for taxpayers to actually sort of go ahead and take up the benefits under the scheme. I think there are, though, a few big challenges which are there. The first big challenge is that when you go through an assessment process, what tends to happen is that an assessment order is passed on multiple different issues. So you may end up in a situation where an assessment order provides or has commented on 10 different issues. The challenge with the scheme is that when you're going in for settlement with the tax authorities, you have to necessarily settle all 10 of it, the issues which have been raised in the assessment order. And you cannot pick and choose to say that, listen, I think on 5, the chances of my succeeding is really high, and therefore I will go in and I'll not want to settle those 5. Whereas in the other 5, where it seems to be a bit of chance either way, I will go in for settlement. That is not permitted under the scheme, and that's, I think, one big drawback around the way the scheme has been structured. Though obviously you can take different years separately, but the challenge always is that if there are multiple different issues which relate to the dispute, how do you settle some of them and how do you not settle some of them? That's one challenge that we have generally seen. The second bit is that if there is a question relating to disallowance, where let's say there has been a disallowance of certain expenses, and at the same time you have a carry forward of loss, you don't have the ability to offset the carry forward loss against the disallowance, but you actually have to pay the tax amount in cash, and not necessarily just do an adjustment against the carry forward loss. I think that's probably the second big drawback that is there. The third drawback which I do see is that in situations, for example, where taxpayers have gone to the authority for advanced rulings, and what we have to keep in mind is that the authority for advanced rulings, especially over the last few years, things have been very slow there. Even though its judgments are supposed to come out within 6 months, it never inevitably doesn't happen. You don't have the ability to settle those cases unless and until the AAR has passed a ruling and quantified the amount. Again, it is a bit surprising to see that, because the authority for advanced ruling only provides a ruling on the question of law and don't really go into the quantification. But unfortunately, the way the scheme is being designed, or what the FAQs talk about, is that unless the AAR has actually set out the quantification or the tax payable, you cannot go under the scheme. Similarly, if you have matters where you have gone under the writ jurisdiction before the High Court, and in India, we still have the concept of writ jurisdiction, where you can approach the High Court for writs of certiorari or mandamus against actions taken by the tax authority. Those cases, again, are outside the purview of the settlement scheme. So there are certain limitations or challenges in terms of going under the scheme. But having said that, I think all in all, what it does provide an opportunity for taxpayers is to resolve real old disputes, especially those which have been stretching for a substantially long period of time, and B, sort of take a call to sort of settle, move on, because in any event, if you've already paid the taxes where you've not obtained a stay or you've only got a partial stay, this actually provides you as a mechanism or a window whereby you can just sort of close out everything as far as the past is concerned. And of course, having said that, the caveat always is that where you have a set of disputes where there is a high likelihood of success, obviously it does not necessarily make sense to go ahead and resolve the dispute. And while I was speaking, I did get one comment on carry forward of losses. I think when it comes to carry forward of losses, I think the issue that comes about is that today, assume that a person has a carry forward of losses. He has 100 rupees of $100 of carry forward of losses. Then there has been a outstanding dispute, where there has been a disallowance made by the tax authorities of, let's say, $10, and they've raised a demand of $3. When you go under the settlement scheme, in an ideal world, what you would have wanted is to adjust the $3 of tax demand against the carry forward loss that you already have, so that there is no net outflow of cash to the tax authorities. But that is not permitted in the scheme. You actually have to pay the $3 to the tax authorities in cash. So it's a timing mismatch issue in terms of the fact that you actually have to pay the amount which has been disallowed, rather than just adjusting it against carry forward of losses. I think the government's expectation or hope was really to ensure that they collect as much revenue as possible under this scheme, because they were running way short of their expected revenue targets. And that's the backdrop in which the whole scheme has been introduced. So I think before I conclude, Ashish and then Meyyappan, if you have any concluding remarks, that will be great.
So I think that is an interesting point that you brought about with respect to the exchange rate fluctuation and how it could benefit under the scheme today, and that makes the scheme much more perhaps viable for a person who's stuck in litigation for 10 years to take benefit of. I think overall, I would suggest that in case there is a long drawn litigation that you are in, and you would like to, and you have reached that stage where you would like to pay the tax and just be relaxed and not think about this, considering it could take so much more time, and you are not certain about how much more time this is going to take. I think this scheme provides a viable option to pay 100% of the demand that has been raised, and be done with once and for all. I think that's the proposition. That's the way one should look at it. One should think about it, and maybe not then think about these litigations again. Maya, over to you.
We've seen a few situations where the scheme has been considered by at least some clients, where they may be in a situation where for other commercial reasons they want to maybe liquidate a company or close a fund, and it's a last investment in it, or if for some reason, if the incentive is high enough for them to want to close out the tax dispute and move on, then this definitely makes it a lot easier for them to go ahead and close the chapter instead of having this hanging around them for the next 7 or 8 years. But otherwise, like I said, the complete success of the scheme in terms from the government perspective, in terms of bringing in more money, I think that's a bit of a tricky one, considering the amount of taxes the scheme still requires clients to pay. But let's hope for the best there.
Thanks, Ashish. Thanks, Maya. I think the bottom line is, and the way I would always look at it is that in most developed countries, when you're looking at tax disputes, or when you're looking at the quantum or the number of tax disputes, the expectation is that tax litigation is not the usual course of things. It is an exception to the norm, as compared to India, where tax litigation is the norm. I think the expectation out of the scheme, and what is really the takeaway I would sort of tend to take, is that even if the total number of litigation gets reduced, just in number terms, and even if there are the large litigations which are still outstanding, that is absolutely fine, because that is something that you see in every other developed economy also, where you will find large litigations which are there before the courts. But the idea or the intent behind this is that let's at least remove anything which is not substantially large, or which is so contentious that no party will want to actually settle it, but try to move all of those out. I think that's the expectation behind this. So hopefully, I think after the lockdown finally ends, I think there will be a lot of activity around the settlement scheme, because um, you will still end up in a situation where you have 45 odd days, in which I think everyone will be working to try to uh, have as many disputes settled as possible. So I think with that, I would sort of end the session. Thank you everyone for joining. If there are any questions, just drop in a mail to any one of us, and we'll be happy to respond separately. Thank you, everyone.